Wall Street slips as Fed coverage statement looms. The S&P 500 fell in a choppy consultation on Tuesday as the index changed into unable to dance from a sharp sell-off within the previous consultation ahead of a key policy assertion from the Federal Reserve that will reveal how competitive the principal bank's coverage path could be. Expectations had largely been predicting the Fed would hike by way of 50 foundation points at the belief of its meeting on Wednesday. However, expectancies that a 75 foundation factor hike turned into at the table have been developing after Friday's higher-than-expected Patron Charge Index (CPI) data for May. In addition, a file from the Wall Street Journal on Monday and forecasts from several banks, together with J.P. Morgan and Goldman Sachs (NYSE, GS), signaling a 75 basis point hike have bolstered that perception. Traders are currently pricing in a 93.2% risk of a 75 basis point hike, up from 3.9% a week in the past, in line with CME's Fed Watch tool. Data on Wednesday showed that the Producer Prices Index (PPI), whilst barely much less than expectancies on a year-over-year foundation for May, remained high as gas expenses jumped. It is without a doubt in which the consensus is shifting to, not absolutely, but it's been a totally brief flow from 50 foundation points to 75, in phrases of market sentiment, said Tim Grisky, a senior portfolio strategist at Ingalls & Snyder in New York. The Fed can also have recommended that talk, and it can even force the Fed's hand to do it because there could be unhappiness now if the Fed didn't do 75. The Dow Jones Industrial Average fell 228.92 factors, or 0.75%, to 30,287.82. The S&P 500 lost 22.75 points, or 0.61%, to a few 726.88, and the Nasdaq Composite delivered 6.57 points, or 0.06%, to 10,815.79. The benchmark S&P 500 index is heading in the right direction for its fifth instantly daily decline, which would mark its longest dropping streak on the grounds that early January. Monday's declines put the index down more than 20% from its most current record high, confirming a bear marketplace started out on Jan. 3, consistent with a usually used definition. Among individual stocks, swimming pool supplies distributor Pool Nasdaq Pool Corp slumped 5.64% after Jefferies reduced its charge target on the inventory to $400 from $485. FedEx Corp NYSE, FDX surged 14.12% after elevating its quarterly dividend with the aid of more than 50%, even as Oracle Corp NYSE, ORCL received 9.40% after posting upbeat quarterly consequences on demand for its cloud products. Continental Resources NYSE, CLR, Inc. jumped 13.35% after the shale producer obtained an all-cash buyout offer from its founder Harold Hamm, valuing the company at $25.41 billion. Declining issues outnumbered advancing ones on the NYSE by using a 2.08 to 1 ratio, on Nasdaq, a 1.36 to 1 ratio preferred decliners. The S&P 500 posted 2 new 52-week highs and 71 new lows. The Nasdaq Composite recorded 8 new highs and 584 new lows.